third consecutive drop from the central bank as inflation continues to improve. Let's go behind the numbers here. Moshe Lander is back with us, senior lecturer in economics at Concordia University. Welcome back, Moshe.
It's a daily segment now.
That's right. 2 in a row. Let's see what happens tomorrow. Your reaction here now, people have been saying the stars, it was written in the stars, we'd get a third cut here. What's your reaction?
That's exactly it. It was expected. There was some talk towards the last couple of days as to whether there was going to be a half percentage point cut, but I don't think there was any doubt that there was going to be a cut. So quarter percentage point is in line with what they did in June and July. I expect we're going to be having the same conversation when they meet again at the end of October. And I think we're going to see interest rate cuts coming for the better part of the next 12 months.
So that leads me down the path of why we are seeing these cuts, okay? And obviously inflation. The inflation rate is in check so we can lower the interest rates, right? I hear that. But I also hear lots of murmurs in all types of places. You read the reports from the banks, and they're afraid of recession. They're afraid of an economic downturn. What do you say on that front about why we're seeing this third cut in a row? And is there something worse lurking in the background?
So I don't know that there's a recession coming. I know that talk's been floating around for 2 years when the Bank of Canada was increasing interest rates. The scaremongering was, well, it's going to trigger a recession. It didn't happen. The Bank of Canada said that the economy actually grew faster than expected in the second quarter, and they're hoping that growth is going to even accelerate in the second half of this year and into 2025, 2026. So I don't think that's really the worry. I think that if you look at the GDP numbers, though, what you'll see is that even though GDP is increasing, a lot of it is on the back of government spending. It's not coming from consumer spending. Consumer spending is actually declining. And if you look at GDP per person, which is how well we're doing at an individual level, that's actually been falling for, I think, 5 consecutive quarters now. Yeah. So there is some worrying signs in the economy, but it's not the recession worry that has the Bank of Canada saying, all right, maybe we need to give the economy a bit of a shove here.
So let me read you this. This is the BMO chief economist, Doug Porter, okay? And he was looking at the latest numbers from Public Finance Canada. It was issued on Friday afternoon, right before Labor Day weekend. And so government spending, I can't even believe this is possible, but government spending year over year is up 15%. So what you just said, right? GDP up, but so much of it is government spending. What does that mean, Moshe, when so much of our rise in GDP is coming via government spending?
Well, it's certainly not sustainable. It does suggest to me that there's an election coming. Usually governments will open the taps a little bit, especially a government that realizes that its entire future hinges on it has to win this next election or it's going to be obliterated. Mm-hmm. So, I think they recognize that consumers are not in a position to be spending when you had generationally high interest rates. Picking up the slack is not irresponsible. That's, in fact, the famous economist Keynes suggested that a century ago, that when you have something like a depression, the government has to fill the gap to minimize the damage. But at some point, consumers have to get back to spending again, and the government has to be able to back away. So what the government is doing is just providing temporary support. Cool. If what they're offering is a permanent expansion of government, that is not good news because they're already having a difficult time balancing their budget. There's no thought as to when they're going to reach a balanced budget again. They're not going to be able to do it if they're increasing spending 15% year over year.
Well, and that's my worry, because it certainly does seem, it sounds more like a permanent example of government spending than anything else. Some of the programs that have been unveiled by the Liberal government in the last year, very costly. Continuing here with Moshe Lander, senior lecturer in economics at Concordia University. Reaction to the Bank of Canada rate cut, the third one in a row now. Moshe, what about the homeowners there? Those who have the variable mortgages that are pining for this and more when it comes to interest rates. What does this mean or say for housing?
So it's good news if you have a variable rate mortgage, but I think it's important to realize that in many cases your mortgage payment is not going to change. It's just the portion of the payment that's going to go towards principal increases, the portion that goes towards interest decreases, and the speed with which you can pay off the mortgage has accelerated a little bit. But if you think that this is going to lead to cash in your pocket, unfortunately, that's not going to be the case. It's going to come from your line of credit or credit card where you're going to see the cash injection. still a lot of people out there with fixed rate mortgages. They got to renew in 2025, 2026. It's better today than it was yesterday, but it's not as good as it was probably 2-3 years ago when they locked in their mortgage. So there's still a little bit of uncertainty in the mortgage market there that's going to keep people awake at night, especially if you have that fixed rate mortgage and you haven't renewed yet.
Moshe, are Canadians simply spending too much on housing? And how does that play out long term? Because if Canadians, let's say you're spending 50% of your salary now on housing, and we're told, well, it's just going to keep going up and up and up. Well, at a certain point, you can't spend 90% of your salary on housing, right? So, how do we get out of that predicament here on just how much Canadians are spending on housing?
Yeah, there is a breaking point that's coming. Unfortunately, everybody needs housing, so we can tisk all we want that we don't like 50%, 75%, 90%. But it really does come down to, in a lot of cases, municipal city halls. Are they creating space for housing to be built? Everybody agrees that more houses need to be built, but then everybody has a NIMBYist attitude that, well, don't do it where I am. And don't do it in a way that's going to affect the equity in my home. So the city halls need to square that circle of, well, how are you going to approve large-scale housing development? It's not the builders that don't want it. It's not even the homeowners themselves that don't want it. You could even argue that homeowners are looking at their 30-something-year-old kids saying, how do I get you out of here? I don't want you here for the entire adulthood or my retirement. And so this is a situation then where there's going to be a change. I don't think it can come from the federal government unless they threaten to withhold funds to any city that doesn't meet certain building targets. But it really is going to have to change the skylines of a lot of cities to get us out of this mess.
Can I just touch on one thing you mentioned before? You were talking about GDP per person, GDP per capita, and how that's not been going in the right direction. How bad is that? How bad is that continued downward pressure on GDP per person?
Well, where everybody seems to think that we're having a recession, even though there's no indication of it, it's the GDP per person that is suggesting that we are experiencing a me-cession as opposed to a recession. And so each of us individually feels like it's harming us. The biggest problem with GDP falling or GDP per person falling is if our standard of living is declining, it means we can't afford to have the lives that our parents had, and we might be the first generation to see things decline. This is a productivity problem. And the Bank of Canada raised that issue in 2023, saying if Canada doesn't figure out a way to unlock productivity gains, this is going to be a problem, not just for Canadians, but even the Bank of Canada said it's going to make us harder for us to do our job in keeping inflation low without it. So it is probably the most worrying part of the story these days. It's not inflation. It's not interest rates. It's not even the housing market.
Moshe, we have to leave it there. Always insightful. Take care.
Anytime.
Moshe Lander is Senior Lecturer in Economics at Concordia University.